BSE. It is in focus after delivering a strong Q1 performance. Lower expenses have significantly bolstered margins, and the management remains upbeat about the prospects and a robust IPO pipeline going forward as well. Before we listen to what the management has to say, let's bring in Harsh to talk about how the numbers stood up. And the question marks about derivative volume. Harsh, there was a lot that was talked about leading up to these earnings, but they actually came in reasonably good.
Well, really solid beat, actually, Alex, in terms of the numbers. So surely give them that credit in terms of the way BSE has handled this. But of course, is the regulatory overhang completely over? Well, maybe not. There's that change of day which will likely continue to impact the numbers going forward, and we've explored that in the conversation I've had with the CEO and Managing Director of the BSE. Now, in terms of, let's listen straight in and let's hear what he had to say about all of this. The oldest exchange of India, to speak to us about Q1 numbers and what the expectations are going forward. So it's a very strong set of numbers with regard to Q1. I want to first ask you a more generic question, sir. Are these kind of numbers sustainable going forward as well? Is that what your investors can expect?
First of all, namaskar from my side.
Sir,
and
thank
since
you.
we are on August 12th, I would like to, in advance, wish your listeners Happy Independence Day.
Happy Independence Day.
Thanks
to
for
you too,
congratulating me on the good performance of the last quarter. Thank you so much. The last quarter numbers, yes indeed, they were very good. They were the first of its kind in the last 150 years of BSE. As far as its sustainability, the effort from all of our side will be to make it sustainable and continue the same way in the years to come. I feel when we look at the nation's growth and development, it looks possible. Under the able guidance of our Prime Minister, we are marching towards Viksit Bharat. By 2047, we want to be a developed nation. If our economy is going to be 30-35 trillion, the market cap is going to be 50-55 trillion US dollars. That means there are more corporates to come, more listings to happen, more mutual funds to come, more stability to be provided, more inflow of capital. Therefore, why not? Why it should not be sustainable?
No, sir. Sir, completely buy into that argument. It's the logical way forward. But sir, talk to us about the last maybe 3 to 4 quarters have been marred by some amount of regulatory headwind. Do you believe that all of that is now behind us and BSE is now well placed, and there is of course a change which is due in August? What would the impact of that change be? But otherwise, other than that, BSE is well placed to drive growth and investor value?
You call it as regulatory headwind. I call it as regulatory evolution, which is a continuous process. In India, if you look at it, regulations are co-created in a consultative process with the same objective as everybody else in the country, protection of investor interest. And your question has the answer. In this period, when there has been a regulatory evolution, quarter on quarter BSE has been doing well, and it will continue to do well, because whatever is happening from the regulatory side is absolutely in the interest of investor, in the interest of the market. We as market infrastructure intermediaries here are to further the nation's cause and ensure protection of investors.
Sir, how do you expect, and this is a slightly more direct question, sir, how do you expect the change in terms of the day from Tuesday to Thursday to impact your option volumes and therefore your top line? Do you expect absolutely any impact of that?
This question, if you would recall, I have answered multiple times. I would like to repeat once more. We had no choice but Friday when we started, because it was the only available day. When there was some effort to have one another contract expiring on that day, a joint press release was made. When one exchange, one contract was made as a requirement, choice was given. Since Thursday was taken by NSE, we took Tuesday. It's not that Tuesday was our first choice at that time. Since we wanted to give respect to the earlier exchange, we waited for them to take Thursday and we took Tuesday. Subsequently, there were market noise about Monday, single expiry and all, which necessitated a consultation paper which stated Tuesday and Thursday. Strictly, the same status quo should have then remained. But since it was a requirement for Tuesday, and this was an opportunity for us to recalibrate, we went to the marketplace again. Market felt Thursday is a better day, and since it is being offered on platter, and since somebody wants Tuesday, why not achieve the twin objective of giving what other want and take what you want? Beware, this entire country had Thursday as the expiry day for a very long time, and in that process derivatives market in India has developed. If that is being offered to us, that's a wonderful choice, why not take it? That's how we have taken, and as always it is based on voice of customer.
Excellent, sir. That's a great response. So sir, talk to us. You know, the margins have inched up very, very steadily. In fact, they've zoomed up if I exclude the one-time expenses or costs that you've had to bear. Are these margins now normalized? This just about sub 70% kind of margin number. Is that something one can expect going forward from you as well? Is it a sustainable number?
World over, if you look at it, exchanges are fixed cost game. So you incur a stringently large amount of fixed cost. And once your top line starts growing beyond threshold, its trace goes into the bottom line and stays there. India is no exception. In fact, in India, we have exchange which has 80% plus margin. So it depends on the product mix and how you take care of that. For us, what we are striving hard is not looking at protecting the margin, but in having a proper product mix. It should be well diversified. It should not be significant portion coming from a single area of our operation. We should have good amount of cash equity business, good mutual fund, good enhanced data dissemination, good amount of index business, good amount of money coming from our data centers. That's the way we would like to diversify it, and that's what we are working upon.
Excellent, sir. Sir, give us a perspective on what you're doing to bring in institutional investors to your platform. That's one thing which may require some bit of work. So what's happening there, sir?
It's a good question that you are asking. In India, there was no level playing field in respect of institutional investors in the recent past post-interoperability. Clients do not like to receive multiple contract notes. They want best price execution, institutional investors. Best price execution was not happening in India. The regulatory stumbling block was the starting point for it. If two exchanges, two contract notes with two VWAP, an institution which places a single order for multiple schemes will have a problem. So typically no institutional volumes were flowing into BSE. Notwithstanding the fact there were price difference between the same stock in two different exchanges, which is not good for the nation, which is not as per the mandate given by the clients to the FPIs or to any other institution. Therefore, we wanted to rectify it. All our actions all along has been in the interest of providing level playing field and thus reduce concentration risk. So we had been working with the regulator. The regulator saw the point in it, and common contract note has been now introduced from June 30th. But that is not the end of it. That is the starting point of another long marathon. Most of the brokers today are not providing best price execution for the institutional investor, notwithstanding a common contract note has come in. They have to either tweak their software to provide best price execution, or at the least they should have a SOR. smart order routing. If they even have a smart order routing, that should be properly calibrated to consider both the exchange volumes, both the exchange prices, both the exchange number of trades, etc. If they just take one exchange volumes, one exchange trade, one exchange prices and try to create a SOR, it's not going to be anywhere mimicking the best price execution. So we are in the process of educating institutional investors as why it is important for them that they should ask for best price execution and to start with SOR. And we are also helping the brokers and software vendor how to ensure software smart order routing. It's not about one exchange over the other. It is about the client getting the best price across multiple venues. This is nothing new. This is how the global markets operate. We are trying to benchmark ourselves with a global best practice so as to ensure the investor who is trading in India is not having a different type of an execution paradigm compared to what he has globally.
How is it being accepted, sir? What's the current, give us the feelers of what you are hearing. So that's the first point. The second point is, what are the other levers that you are using to grow your top line? Agri, commodities, you're getting into some of those areas as well. And how much of an impact will all of these measures make to your top line, say 2-3 years from now? What's the growth looking like?
The first point, how about the acceptance level? Honestly, it was not just the exchange which was pushing for it.
Yes.
There has been a very strong feedback from the institutional investors to the regulator that the common contract note should be put in place, and there is a strong demand from the institutional investors to the custodians. The custodians have been extremely supportive. That's how it has seen the light of the day. Otherwise, just one exchange asking, it's a big juggernaut to make it move would not happen, isn't it? So there is a great amount of acceptance. Will it immediately get into some results of level playing field? May not be. It will take some time. Rome was not built in a day, but certainly the first good steps have been taken, and we are very, very confident the market, realizing its importance, will take it forward. As far as growing the top line, we as market infrastructure intermediary, our goal, the primary goal, is to serve the nation in capital creation. It is not just growing the top line. Under Dr. Patil, we all grew up from IDBI and we came to NSE and set it up at the time. The answer is very simple. We are here for making profit, but not for just only making profit. We have a responsibility of building nation. We will introduce such products. We will work for such products and functionalities which helps in it. Agri and commodity are very, very important part of our ecosystem. As and when the right time comes for us to make a meaningful existence there, we will come in. There is no point in being me too, isn't it? We have to make a significant contribution. We have a long way to catch up. In this 150-year history, the last 3 years has just started making BSE a bit vibrant and making its existence more meaningful than in the past. We have a long way to go. We are committed to nation building, so we will not leave any efforts in making that happen.
Okay, so that was the management MD and CEO of Bombay Stock Exchange talking about the quarter gone by. Good set of numbers, and the stock reacted positively on that day, seeing a bit of a pullback right now.